Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference. Joining me for this segment, we have Balaji Venkataraman. He is Client Portfolio Manager with American Century Investments. We're going to discuss opportunities in fixed income. Balaji, it's great to have you with us. Welcome to Trade Talks.
Thank you, appreciate it.
And that really has been a key topic here at Exchange, the fixed income opportunities in 2023, after a pretty brutal 2022.
Yeah. Really an unusual year in 2022, and whenever you have that sort of pain, that sort of unusual activity in markets, it generally breeds opportunity, and we're certainly seeing that here in 2023. What you saw was negative total returns in 2022, big re-rating of interest rates, and so now the opportunity is in yield, right? There's a lot of income to be had in very high quality fixed income, and a lot of people are taking advantage of that. There's a lot more interest in fixed income coming out of what was a brutal year.
So you mentioned high quality fixed income. What specific areas are you looking in?
Yeah, it's really a range across the investment grade spectrum, which is a pretty broad range. So when we say investment grade, triple B rated and higher, so pretty high quality. So investment grade corporates, even treasuries are yielding north of 4% in some cases. Securitized debt, which is high in quality, low in duration. There's really a broad range of opportunities to earn north of 5% yields right now in investment grade.
Are there lower risk ways to earn income that exceeds inflation?
There are, and I think the best way to think about inflation is what is it going to be like over the next 12 months? And so if you project that out over the next 12 months, a lot of the yields that we're seeing, 5% and greater in investment grade fixed income, are probably going to beat inflation over a 12-month period, which is probably going to come down to, call it 3% on a 12-month time frame. So all of those options are really going to be able to beat inflation over the next 12 months, I think, whether it's treasuries, whether it's corporates, whether it's high-quality securitized.
So American Century, more holistically, how are you approaching macro?
Macro?
Macro, yeah.
Yeah, I think we talked about sort of the shift in fixed income 2022 to 2023. You're also seeing a macro shift from interest rate risk and the Fed and inflation really driving 2022. Now in 2023, it's probably more the economic slowdown and sort of the recession risk that's building. And you're seeing more indicators, you're seeing more evidence of that starting to pile up. We saw it with businesses last year. This year it's probably the consumer that's sort of that last leg of strength in the economy, starting to show weakness, whether it's layoffs, house prices coming off, retail sales coming down. So it seems like all signs are sort of pointing to a meaningful slowdown over the course of this year.
All right, we appreciate the insight. Thanks for joining us on Trade Talks.
Absolutely, thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.